Welcome back everyone. So today I'm going to be spending the time talking about Tesla. There's been a few announcements regarding Tesla and the price of their stock, for instance, so we're going to be looking into that. But before we do, here is an update on my Trading 212 portfolio. So honestly, I've been quite lazy this week. There hasn't been much movement other than funding the account. So we can see I have some free funds available. Now the £9.78 is just from dividends from earlier in this month. And at the moment we've got all the different pies. Some of them are performing well, so consumer up 4.18%, ETFs ahead as well with 2.79% gain. And then finance, healthcare and utilities are in the red, the highest being finance at the moment. So these are opportunities to buy more into the individual pies. And so with the likes of finance, we have the different companies. I've got 4 here: Citi, Bank of America, JP Morgan and Wells Fargo. So these are the companies that I currently invest in. On the screen you can see every single company that I currently invest in. That's across the different pies that I have, but also the individual companies that I invest in. So it's close to 40 different individual companies. Now I'll be talking in the future as to how many companies someone should probably look into owning. And so with respect to an account update, that's all to say really. So let's take a look at Tesla. And we can see the current price, it's just hit a record of over $2,000 per share. Now back in 2019, we used to have ranges in the $220. This is actually when I first invested. Now since then, the price has just been increasing, which looks to be at an exponential rate. It's just been flying. So how is it that this stock has increased to such levels? I want to talk about the history of the company for a bit. And so back in 2003, when Tesla was founded, Elon Musk was actually providing most of the initial funding to support the business, and so his role was being that of a venture capitalist, which is known as a VC. Now he made his money from the PayPal days and then allocated a set percentage into the likes of Tesla. So fundings generally take places in what's known as series. So the first round, which is known as Series A, Elon invested $6.5 million US. There was also a subsequent round of investment of $7.5 million and then a Series B of $13 million. Now the money just continues from there. The third round at $40 million, which was led with a lot of other VCs and other high-tech profiles such as the Google co-founders. And then we've got a fourth round of 45 million, a fifth round of 40 million. Now this fifth round was actually a debt financing round to prevent Tesla from being bankrupt. And so from that we have Elon giving away 70 million of his own money into the company. And of course people give money so that they have shares, and then in the future that amount will be worth a lot more. And so in 2004 we have Elon Musk becoming the chairman of the board of directors. And so we have Tesla positioning themselves nicely to becoming the leader in electronic-based vehicles. And that was amplified because the rest of the competition actually delayed or recalled such electronic vehicle plans. And so the very first Tesla vehicle was actually that of a sports car, and that was released in 2008. And so the game plan here was to start with a premium sports car to help build out all the features required, given that someone who is more likely to buy a sports car generally has more disposable income. And so that helps to fund the entire business model. And it's no different from, say, the technology sector where you build up an MVP or minimum viable product, but you focus on building features for those individuals with the highest amount of capital. And so from there you can move on to more mainstream vehicles to reach that of the mass market. And so with the likes of the Model S, which was released back in 2012, of course this is still at a high price point, but we can see a trend with the likes of the Model X with prices continually decreasing, and then to that of the Model 3. So right now the Model 3 is as close to mass market that we have. You've got your more premium features with the likes of the Model X, the Model Y, and then you've got certain features taken out so that more of the mass market can experience a Tesla for themselves. So as of March 2020, we have Tesla producing over 1 million electric cars. And so taking a look at the graph for a second, we can see that from 2018, this is when we started to see production levels really increasing, and that is due to the Model 3. Now there is really high demand in China as well. There's a gigafactory out there just churning these vehicles as we speak. So on the demand side of things, Tesla is looking really healthy. Now going back to the Tesla stock price for a second, we have $2,000. That is the price of an individual stock. Now, there's all different ways in which we can analyze whether the stock price of a company is close to the value of the actual company itself. So with the likes of Tesla, we have a lot of vehicles being produced and the company has their own revenue figures. And so what I want to look into is whether or not the $2,000 price point of an individual stock is actually worth that amount. Now, there's all different ways that we can analyze a stock. For those that look into dividend-based companies, they're somewhat easier to analyze because we have dividend-based metrics such as the payout ratio, etc. But when it comes to a growth-based stock, and Tesla is one of those, we have other metrics that we can use to analyze the stock. So I'm going to provide some formulas on the screen. Don't worry, it's not a big deal. But we have the price per share, and if we divide that by the earnings per share, we get the PE ratio. And so right now the PE ratio of Tesla is around 1041. And so if we multiply that figure by the earnings per share, again available on Yahoo Finance, so if you multiply those together, you get the price that the stock is trading at. Now, I mentioned a payout ratio of around 1,000. Now, realistically, you want a ratio that is 20 or lower. And so with the case of Tesla, we have a P ratio of over 1,000, which basically means that the stock price is trading at 1,000 times the earnings rate. Quite honestly, with a price right now of $2,000, you have to ask yourself, is the company right now or in the near future worth 1,000 times their current earnings? Now, this happens a lot with growth-based stocks where you have a P ratio that is a magnitude higher. Let's just say the stock price drops 10x. So now we have $200. Then we still have a trade-in price of 100x the earnings. But the P ratio doesn't factor the earning growth potential. So that's where the PEG comes into place. And the PEG looks into the growth. So taking that P ratio, you can just divide by the growth of the company. And so it's calculated in the case of Tesla that we have a PEG ratio or a PEG of 5.99. Now, in the automotive industry, we have an average of 4.13. So the PEG ratio is pretty high within this industry, but an ideal number is less than 1. So the smaller the PEG ratio, the better it is. And so we have Tesla that announced previously their 5-for-1 stock split. And so the company is very much aware that their stock price is extremely high right now. So my question for you this week is, do you think it's a good investment to buy Tesla stock? Now, personally, I think it's too late to enter into Tesla. Now, of course, the price can continue to climb, but Tesla will have to be constantly profitable. They need to continue to grow. And I would actually argue that with a price point of $700, Tesla would still be overvalued. So for me, I'm happy that I invested when I did into Tesla. I hold their stock in a separate account. It's not to say that this stock will reach higher values in the future. We just need the growth of the company to catch up with the current price point. So let me know what you all think. Now, if you enjoyed this video, then do give it a thumbs up. And if you're new around here, then do consider subscribing. And for those that have subscribed already, I really appreciate it. So thanks to everyone for your continued support. And with that said, I'll catch you in the next one.